Welcome back to the Dividend Diplomats YouTube channel. Lanny, Bert, the Dividend Diplomat, everybody, we got a special Thanksgiving Day release video here featuring 3 stocks to watch over the next few weeks.
3 stocks to watch or 3 stocks to buy. I know you're sitting there gnawing down a turkey leg, maybe fisting some cranberry or gravy. I don't know, or you're going head first in some stuffing, or you're even doing some scary movie type stuff with putting your germs in it. But before you start eating Thanksgiving, subscribe. Definitely give this video a nice thumbs up. Turn it blue. It's Thanksgiving. We want blue hands on this day. It's a great day for buying dividend stocks. And I know Bert just put a solid list here for dividend stocks to buy.
That's right, Lanny. What has been going on in the stock market recently? It has been absolutely wild. At the time of this recording, the stock market finished just a hair off of its record highs, under 4,700. The final closing mark was 4690 at 0.70. So for the month, the market today is up nearly 3%. Year to date, the market's up almost 27%. And over the last 52 weeks, the stock market is up 29%. So everybody, here's the theme. The stock market is hot right now.
Stock market is still hot, still trading at a current PE ratio of about 29 to 30 times earnings. Definitely high valuation here. You know, I feel like it can't burst through that 4,700 threshold in the S&P 500, but it doesn't matter because the dividend diplomats find undervalued dividend stocks to buy or to add to your watch list to keep an eye on. And Bert has thrown together a nice list of 3 dividend growth stocks who have at least over 10 years, and one of them is even a dividend aristocrat.
That's right. But first, before we jump into the stocks, how do we find those undervalued dividend stocks to buy?
Tell them, Bert. Tell them.
Using the famous Dividend Diplomats dividend stock screener. 1, PE ratio less than the S&P 500. 2, dividend payout ratio less than 60%. But, you know, we like to look at it with a 40 to 60% dividend payout ratio. 3, that history of increasing dividends, where we look at the number of years a company has increased its dividend in a row and the 5-year average dividend growth rate. And then, hey, we throw in that bonus metric, the dividend yield. That's what we run all the stocks through before we buy or add them to our watch list.
That's that little whipped cream on the pumpkin pie. That's what the yield is. You want the pumpkin pie already. You want that smooth bite. You know, Mary Callender really makes a darn good one, but you want the yield. You want the whipped cream. After it passes all the metrics, that's what you're going to get. So, Bert, here's a question before we dive in. Do you own all 3 dividend stocks to buy on this list?
You're darn right I do, Lanny. That's right. I own all 3 of these companies. And wait a second. You own all 3 too, right?
You know it, brother. Right. So, Bert,
is right.
You want to jump in? You want to jump in on the first stock? Because I know you've been buying this stock a lot lately, really starting and building your position. I think the community wants to hear it. I know I want to see your take on it. So let us go with number 1.
All right. That first company on this list is Lockheed Martin, ticker symbol LMT. You're absolutely right, Lanny. I think I currently own 3 shares of Lockheed, which doesn't seem like a lot, but that cost basis is around $1,000 because their share price is so darn high. I was buying them in the low 330s, even one I got in the 320s. So currently Lockheed stock prices increased to $345.18. But just a small increase when you think about it, just a few percentage points here or there, nothing too crazy. But when you really start peeling back the metrics, you can see why I still wanted to keep Lockheed Martin on my watch list and keep a close eye on them over the next few weeks. Should we jump into the stock screener here, Lanny?
Hit him with it.
All right. We're using closing prices as of November 23rd. Their price is $345.18. As I just said, their forward earnings for 2022 are $26.40. That gives you a PE ratio of 1308.
Wow. I mean, a very low PE ratio, definitely less than the S&P 500, less than General Dynamics, GD, the competitor. To go into that second dividend stock metric, the dividend payout ratio, again, their forward earnings is projected at $26.40. but they pay an annual dividend spread out over 4 quarters to total $11.20. So that equals a perfect payout ratio, 42%, Bert.
They have a 5-year dividend growth rate of 9.52%, and they have increased that dividend for 19 consecutive years. So they aren't on the list, but they aren't an aristocrat yet, but they're closing in on it. I thought you were doing the blue meanie dance there for a second, Lanny. So there you're going with it. So, but that bonus metric, the dividend yield, their current yield is 3.25%. So a very solid dividend yield there when you consider their 5-year dividend growth rate.
And Lockheed's performance kind of has just flatlined over the last 52 weeks and year to date. So, they haven't really had much price appreciation lately. So it could be a good time to buy Lockheed Martin stock.
Yeah, and look, what I liked about Lockheed a few weeks ago when I started buying them was the sector they're in. They're one of the largest defense contractors. They're constantly working with the government. You read the headlines, you read the news, you go to their page of all their recent stories. They're always talking about the billion-dollar contracts they win with the government. And they just keep coming. It's a high barrier of entry because it takes a lot to get approved by the government, and it takes a special company to be able to do the specialized stuff that Lockheed does. That's why I am very optimistic about the company's future growth.
Dogs gotta eat, Bert. So that was Lockheed Martin. We'll summarize all the stocks at the end. Great dividend stock, again, 19 years of increases, phenomenal. But Bert, let's talk about Big Red, the second dividend growth stock, Verizon Communications, ticker symbol VZ. How are they on your list? Let's hear it.
Well, they're on our list for the same reason they've been on our list for the last 2 months, 3 months, 4 months, 5 months, 6 months. We've been talking and hyping Verizon for a long time. Lanny, I know you've been a big advocate for Verizon as you built your position to well over 100 shares over the last year.
Got over 100 shares. I did it. Just like Rocky. So again, I've got a very big position there. Obviously, I own a lot of AT&T stock as well. So my telecommunications is pretty hefty. I know, I don't know how many shares you own, but I'm sure it's not as large as your AT&T stock position.
Absolutely not. And we're closing in on 50 shares of Verizon. So it'd be nice just to push it over that big 50 mark here. And what's been interesting is, we all know about Verizon. They're one of the largest carriers. They are pushing aggressively into the 5G, and they're one of the market leaders there, competing with T-Mobile and AT&T. They're crushing it from the internet standpoint as well. And they're just well positioned to take advantage of the trends of where consumers are going into the future. They've crushed it in the FCC auctions in the past. They're really building the foundation to just take over the space. And what's been interesting is the telecommunication sector as a whole, the prices just keep sliding. So it's hard to just keep Verizon off my watch list as their price is in the low 50s.
No, exactly. And I mean, again, going into the first dividend stock metric, analysts right now for the price to earnings ratio, they're expecting earnings to still be $5.39. So as AT&T stock has come down, Verizon stock has come down. This could be because of the signs of rising interest rates, maybe in 2022 towards the end. Obviously, when you carry a lot of debt in order to grow, that could hurt your long-term cash flow potential, your operating cash flow. So again, the PE ratio, though, with a stock that's trading at $51.75, your PE ratio is less than 10 at 9.6, Bert.
Yeah, that's nothing. That's nothing. It's lower than Lockheed, lower than the market, not lower than AT&T, but you'd probably argue that they deserve to be trading at a higher PE multiple than AT&T at the moment. Moving into the second metric, their annual dividend is $2.56. Divide that by the 530, and that gives you another perfect payout ratio on this list of 47.50%.
Not too bad. Perfect ratio. Going into that dividend growth, they've been growing their dividend for well over 16 years, albeit their average dividend growth rate right now is about 2%. So you really know what you're going to get with Verizon right now, especially, they're in that low growth, higher yield mentality. So Bert, it's a good segue. What is that dividend yield for that bonus metric?
It is so close to 5%. It is 4.95%. So once Verizon crosses the 5% yield, it's going to be very hard for me to not add at least a few shares to my position.
Get that stick of Big Red, Bert. You want it.
Yeah, they're down 12% year to date. They're down 14.66% over the last 52 weeks. So Verizon, It's a worthwhile spot on the watch list, if you ask me.
Could be a phone in your pocket, but it could also be some dividends as well in your
Yeah.
wallet.
So
So
wait a second, Lanny.
what's
You
that?
said there was an aristocrat in this list, right?
I did.
Lockheed's not an aristocrat. Verizon's not an aristocrat. That means the aristocrat is the third stock on this watch list. Ain't that the truth, Lanny?
Well, let me tell you something, brother. This dividend stock hasn't been on a watch list for over a year plus, and there was actually concerns in the pandemic if they were going to stay a dividend aristocrat. But Bert, Leggett and Platt, ticker symbol LEG, they came through. They increased their dividend. They didn't keep the shareholders like ExxonMobil, XOM waiting until the bitter end. Leggett and Platt still continue to trudge through to keep the aristocrat status. They are back on your dividend stock watch list, and the community knows. And Bert, not just the community, but the millions and millions of dividend investors want to know why it's on your stock watch list.
All right, let me draw out to you what Leggett and Platt's stock price has done over the last year. Started here, shot all the way up here. We'll go to the top of my head here. And now why it's on our stock list, it is right back down because the stock price has come tumbling down to the year back to where it started because they are getting crushed right now because of the supply chain issues and the increased cost of their cost of goods to produce all of their furnishings and all their products as well. So they're getting hit on two fronts now. So obviously the stock price is reacting due to increased expenses and on multiple fronts, but their sales are still growing too. So it's an interesting little play here for Leggett and Platt.
Companies are in a tough position. They want to grow revenue, but they need product. And in order to grow profits, they need to control expenses. So ultimately, that's going to get passed on to the consumer eventually.
Yeah.
But Bert, as of this, video, November 23rd, they're trading at $43.04. Do you want to hit us off with the first dividend stock metric, the price to earnings?
You got it. Yeah, their forward EPS is $3.03. That gives you a PE ratio of 14.2. So again, less than half the PE ratio of the broader market. We'll move into that second metric here. Their annual dividend is $1.68. Divide that by the 303. A perfect payout ratio here of 55.45%.
3 for 3 on the perfect payout ratio. That's been a long time since we've had it because we have a lot of people on the blue meanie, the bluebird's coming out in full effect. But it's hard to get all three. Usually we either have one person that's well below 40% or one that's right over 60%. So having three in that 40 to 60 is very rare. So great stock watch list just from the payout ratio. But Bert,
yeah.
Leggett and Platt, that third dividend stock metric, again, they're a dividend aristocrat. They've increased their dividend for over 25 years then, which actually they've done over 28 straight years of increases. Their dividend growth rate on average is about 3.49%. So kind of keeping up with the current rate of inflation. I would anticipate maybe a larger one in 2022, hopefully. Obviously, they had a smaller one this last go around. So
yeah, no, I would agree too. Once some of these supply chain issues get ironed out and hopefully the cost of these products decrease, you'll see a larger increase later in 2022, as we hope. And then to round out, their dividend yield is closing in on 4%. It's 3.90% at the time of this video.
Yeah, and they have, go ahead, Bert.
No. I was going to say, after you, Lanny, because I was going to say one other point after this to transition out of it.
No, I mean, hey, they're showing pretty positive signs right now. Is it a good time to get Leggett and Platt? That's the question.
Yeah, and I was going to say, this is why we look at the payout ratio here, because obviously the company's getting hit with increased costs and potential reduction in earnings. We're always asking ourselves as long-term dividend growth investors, is that dividend safe? What is going to be the impact to the dividend if the earnings were to crater, if the earnings were to fall? So Leggett and Platt that's getting hit with some short-term pain on the income statement, showing a dividend payout ratio of 55%. I'm not as concerned about the company's ability to cover that dividend in the long term, which is why I'm putting them back on the watch list.
Perfect. Now to quickly summarize, we have Lockheed Martin. Price to earnings ratio of 13 times earnings. Payout ratio is perfect at 42%. They have 19 years of growing their dividend at about an average rate of 10% with the dividend yield at 3.24%. Bert, what about Verizon?
All right, PE ratio 9.6, payout ratio 47.5, 5-year dividend growth rate 2.11, increase that dividend for 16 years, and that yield is almost 5% at 4.95.
Nice. And then to round it up, Leggett and Platt, ticker symbol LEG. P ratio is just at 14, payout ratio at 55%. They're a dividend aristocrat, growing their dividend at an average rate of about 3.5%, with a dividend yield approaching 4% at 3.90%. So, Bert, what you gonna do now with these dividend stocks on your watch list?
All right, so if I'm going to rank them of which stocks am I most likely to buy this week and next week, it's probably going to be Verizon, Lockheed, and Leggett and Platt. Wasn't necessarily in the order we went through, but to me, I would love to round out my Verizon position to 50 plus shares. That seems like an easy one, especially because we're close and their yield is almost 5%. LMT, I might sprinkle in one share. The 345 stock price is, it's not the cheapest to buy, so you're not going to see me running to drop in 15 shares there. It might be one, maybe even two if the price falls. And Leggett and Platt, it's the third one on this watch list. I'm going to keep a close eye on it. Yield jumps over 4.4%. Might just add a couple shares here or there too. Who knows? I like all three of them though. So
Nice. I like it, Bert. Now, to all the community and the viewers out there, are these three different then stocks on your watch list? Are you buying any of these three stocks? We want to know in the comments. What else are you watching? Let us know. If you haven't already, definitely give this video a thumbs up and don't forget to subscribe. Bert, what else do you got for us?
anyone else with the blue meanie here during this video with us? Okay. All right, send this off, Laney. Let's get out of here before the people.
Happy Thanksgiving. Everybody enjoys their day. Eat a lot, love a lot. Make sure you definitely take a rest as well on this day if you can. We appreciate everybody for stopping by. That was Bertha Hurt, and this was Lanny from the Dividend Diplomats. Over and out.